That means we can just talk together or something. I mean, I'm happy to talk about whatever is on your minds.
Yeah, same here. Should we do a quick round of introductions just so everybody has some context on who's in the room?
Yeah, why don't you kick us off?
Sure. Hi, everyone. My name is Geri. I'm at a fund called Laconia. We invest in seed stage B2B software companies with a focus on Northeast major markets, as arbitrary as that might sound in these current times. But we're looking at anything focused on making existing markets and workflows more efficient, industry agnostic. So we have investments in fintech, insurance tech, retail, pretty much across the board. And we're typically writing checks of 500K to $1 million and then co-investing with other seed stage investors in those rounds and following on in the Series A. Good to meet you all.
Jerry, do you want to just pass it to someone?
Yeah.
And that way everyone can.
Yeah, good idea. Yeah, why don't you go kick off next?
Okay. Hey everyone, Nikhil. Been at Shasta Ventures for 8 years. I'm one of the general partners in the firm, and our focus is on early stage investing. Typically, we're leading Series A rounds. We do a little bit of seed, a little bit of slightly later stage stuff as well. My background is as an entrepreneur in New York, actually. I started a company called Artsy back in 2008. It's a marketplace for art. And have been in venture now for a while. A few of my New York portfolio companies are The Farmer's Dog, which is a direct-to-consumer fresh pet food business where we led the Series A. Frame.io, which is a collaboration software platform for video. And I'll stop there and pass it on to Joe.
Hey guys, I'm Joe Benjamin, co-founder of Cheetah IQ, and we automate the research process for B2B salespeople so they can more effectively and efficiently research their prospects for outreach and booking meetings and preparing for meetings. I've been in New York for about 8 years, working at a lot of early stage startups, some of which you've heard of and some of which you probably have never heard of. And I'm happy to be here today. And I'll pass it along to Aware Health.
Hi everyone, my name is Param. I'm founder of Aware Health. We are a mental health digital therapeutic company, and excited to be here with all of you. My background before starting the company is in research in psychiatry at the intersection of psychiatry and technology. I was a postdoc at NYU before that, and the company that I'm working on provides, we are a digital therapeutic company, and that's our vision to get FDA clearance and so on. But right now, we're providing our solution as a preventative intervention for employers, for large employers, starting with the legal employers. So it's great to be here with all of you. And yeah, so I'll pass it on to Lola.
Hello, everyone. My name is Lola. I'm the founder of Base. And what Base does is to allow people to track their sleep, stress, energy, immunity, and so forth via blood or saliva tests that you can take walking into a lab, although not right now, or directly at home with one of our test kits. And you can manage absolutely everything with your app. Like, we have a digital subscription for $95 a year that allows you to like literally see your blood tests as like a timeline, personalized suggestions, or chat with a functional medicine doctor or with our science team about any questions that you may have. Prior Base, I was a big tech company person. I've been at Amazon, Facebook, and Instagram. Although I was shortly at the Bay Area. I'm based in New York, of course, but I was in the Bay Area prior at a Kozla-backed company, leading engineering there. And yeah, that's it about me. So I'm gonna turn it to Justin Clapper.
Thanks, Lola. So hi everyone. I briefly introduced myself. You didn't hear it before. I'm the token student recording this session. Super brief, spent about a decade in the Navy. Before this, last 6 years as a SEAL officer before going to Columbia, where I'm getting my MBA, and I'm going to Charge VC to learn about seed stage investing. So honored to be in the same breakout room as you all and be a part of the conversation.
Dimitri, do you want to go?
Sure. Hi, I'm Dimitri, the co-founder and CTO of WeStock. We're kind of changing the way that consumers are requesting products at retail stores and helping brands kind of grow their interactions with their consumers and kind of streamlining the whole process. I guess Jen is next.
Hey guys, I'm Jen. I'm one of the speakers in the breakout session at the end of the day. I specifically support early stage B2B startups with founder-led selling and acquiring early adopting customers, whether it's international startups looking to come into the US market or it's domestic startups looking to find market traction.
Cool. So should we try to talk about the new normal? I guess, I mean, I'm happy for anyone who has a question to just jump in and any of us can try to answer it. Like, I'd love to personally hear from all of you as founders, you know, just what you're going through and what's top of mind for you.
Hey, maybe I can ask a question. I was thinking about asking this question during one of these breakout sessions. So what we do, as I explained earlier, is we sell to large employers within the legal market. So international law firms and national law firms would be our target market. What we've seen is a lot of law firms are not as severely impacted as travel and other businesses, especially the national and international law firms are. But they are going through a phase of confusion in the sense of understanding how they're going to allocate budgets for well-being, if they're going to cut down some of their HR budget allocations and so on. So we have been thinking hard about this because that means we are going to be put on an indefinite hold, maybe for a few months, maybe more. There is two things that we are doing to respond to that. We have started to conduct webinars by experts or lawyers and who are also mental health experts, and we invite law firms to join them, which have been very successful. But in terms of launching the product, which is scheduled to begin at the beginning of May, we're actually thinking of pivoting and going direct to consumer instead of going through law firms, which are currently in a challenging phase like everyone else is. So just wanted to hear everyone's comments on that. In terms of comments on the strategy you're thinking to take.
I think it's an interesting idea, Param, because I'm involved in a number of companies in healthcare that sell through employers, and I, like you, worry about that channel in this new normal where everyone is tightening their belts, where anything that is not a must-have for employees or leads to significant cost savings where that ROI is super obvious. Anything outside of that could be a very challenging sale for the next couple of years. And I think in the world that you're in mental health, it feels to me that that's more important than ever. If you're offering everything virtually, there's a set of people that are going to start to be accustomed to that new normal of getting help purely digitally. And so it could be a better time than ever to have a digital therapy mental health service. It's something I was jamming on with someone yesterday, where I've looked at so many companies in that world for so many years, and the reality is it's been really challenging because people still want that in-person relationship with a therapist. But when that's not possible, the only option is to have it fully digitally. And it feels like if that digital transformation of mental health is going to happen, it has to be now. So And then the other reality is that, as was mentioned in the previous panel, CPMs have actually gone down pretty dramatically for most consumer services over the last 45 days. And so it could be a great chance to test your consumer value prop and just see if you can unlock customers in the digital consumer marketing channels.
Yeah, I would also think a lot about competitive landscape and positioning, right? What is it that makes this value proposition different from any of the other platforms that either currently exist or have tried to launch in the past? Because I definitely agree that there's a massive market opportunity and a huge need, probably more than ever now. But you're still going to be competing, for mind share and for market share ultimately against companies that already likely have a head start in that space.
Yeah. One thing to also think about too is self-insured versus fully insured companies. I worked for a healthcare tech startup where self-insured companies, if they can reduce the costs that people are spending, going to unnecessary doctor's visits or things like that, it can dramatically impact their cost basis as well. I don't necessarily know specifically how that works with mental health versus like going to seeing a primary care physician, but there's certainly something to explore there in terms of just the way that they've structured their healthcare coverage, whether it be a large enterprise who's typically self-insured versus down market where they're smaller and leveraging a different insurance policy.
Yeah, thank you. I think most of the firms that we've been in touch with, they're large self-insured employers, and I think I appreciate all the feedback. We did a lot of work in the past several months to make sure we understand a competitive difference that we have, and what we're providing instead of one-to-one therapy is we're providing group therapy, which hasn't been implemented in a scalable way, and a few additional functions such as peer support, which also hasn't been scaled very effectively. So our value proposition is different. However, the timing to sell this to large employers is still challenging, even if they identify a difference. And that is why we're looking for other ways to reach consumers right now. So I don't have a follow-up question. So I agree with the feedback, and I really appreciate that.
I can ask a question. So we're an early stage B2B SaaS business. We launched at the end of January 27th, and we had revenue pretty much immediately, and it was growing fairly rapidly given where our product stood. And then obviously things changed and sales cycles got much longer. Is it even worth my time to try to raise money, or should I just keep my head down and keep growing revenue and focusing on customer acquisition?
What's the current status of the business? Launched in January. Has there been any capital raised to date? Any like what's current revenue, customers, et cetera?
Completely bootstrapped. We're at $709 MRR. And the strategies basically land and expand. So get pilots in a bunch of companies and then grow it from there. And we started to increase our deal size, not like significantly, but we're selling seats at like 6 people per company, and now our contracts are going up in deal size, but things just take like 3 to 4 times as long.
How much runway do you have without raising capital?
So personal runway is at least a year for both of us.
Yeah, I mean, at this stage, any round you'd be raising more likely than not would be more in the realm of friends and family. If you, or angel capital, if you have easy access to that, or you think it'll kind of be a quick close, you could give it a go. But it sounds like you have the bandwidth to keep going and building that traction and building that momentum. So I would be inclined to say wait. But it's obviously always specific to your situation. Nikhil, what are your thoughts?
I think even putting the current crisis pandemic aside, you ideally always want to go raise money when you're seeing some sort of an inflection, right? Where maybe you've seen kind of a couple months worth of momentum in sales, even if you're very early, or if you've launched a new product that's just, boosted usage, engagement. And so for you, Joe, my sense is this is a great time to have as low fixed costs as possible, to build product, to just hunker down and try to get to the other side of this, where once you have just a little bit more momentum in sales, you can go raise money. And I think that's the approach that I would take. It's not a bad time to have friendly conversations, informal conversations, to say, hey, we're bootstrapped, we're not raising, but here's what we're doing. But I think the time best spent right now will be on product and on casual customer chats and just having as low burn as possible.
Right. And then one small follow-up question to that. One thing we've heard is that VCs, they said that they want to see a proof of concept where we sell an extremely large enterprise deal. So like tons of licenses for the product. Is that something that could be like considered an inflection point, or is that just something that we have to prove to even raise money?
Well, it depends what your go-to-market motion you think is going to be at some level of scale. If you are going after large enterprises, and if that's the strategy, then I think you want a proof point there before you raise a significant amount of capital. I don't know, Jen, Jerry, others, if you have thoughts on that.
Yeah, the only thing I would say is going after the enterprise is just such a wildly different beast from a resourcing perspective and from needs, also just buying process. So depending on your resources, like if you have the time to invest, to try and uncover kind of what that opportunity looks like. But if you guys are serving quite a bit of, single users and you're growing there, it's just a matter of figuring out kind of which angle to choose. Obviously, selling more transactionally versus selling an enterprise are just wildly different motions that require different level of time investment, but then also maybe even product investment as well.
Yeah, and I'd be careful with chasing any sort of seemingly arbitrary goals that are put out on the investor side, because I think at the end of the day, you have to be achieving the milestones that you think are critical to the growth of your business. And so one thing you mentioned was land and expand. You can have a land and expand model that never really sells to large enterprises, right? Those can be in some cases completely different market segments. And even if you do eventually end up selling into the enterprises, 2 or 3 years from now, I don't think that necessarily has to be the milestone that demonstrates meaningful momentum and market traction in this first year or two. So I would take all of those, milestones that are put in front of you with a little bit with a grain of salt, in the sense that they still have to be right for the business trajectory as you see it at this point in time.
Got it. Thank you. That was all very helpful.
Lola, Dimitri, anything on your minds?
I guess that for me, we cover the topic from different angles, but yeah, for us particularly, we fundraised on a safe in January about 850K, and the runway was originally planned for November, October, to fundraise towards the end of the summer before Christmas and Thanksgiving. And basically what I did here was to extend the runway a little bit more. There were people that wanted to participate in that safe, but we really didn't prosecute them. Like, we just were not interested in taking more money at the time. And what I did was to reach out to the couple people that wanted to participate with respectively 50K, and like get them on board to make sure that we can extend the runway until March 2021 with buffer. Just like to figure out exactly, and to cut some expenses as well. It's not like those extra 100K gave us that much runway. It's just, well, we were thinking about a couple of hires that will not happen until we fundraise, which I think that the company will definitely be okay. And now we are actually launching and rolling out, and still my plan is to fundraise at the end of the summer, just in case, like, even though we have runway, but after we have around 3 to 4 months of market data, just go and start testing the waters out, and of course start building relationships with investors right now. Like, hey, we're not fundraising, but here we are based, we are launching, this is our product. But yeah, would love any feedback on our strategy if anyone has any.
Yeah, I think extending runway is something that pretty much all of our portfolio companies at least are looking at, and adding a little bit more buffer as there's increased uncertainty in both their sales cycles and where capital markets are going to be in a couple of months. Aside from just the runway extension, though, I think you should definitely keep having conversations to get a sense of what investors are going to want to see before you move forward, right? I know I mentioned this before, but this idea of the milestones, because an extra couple of months of runway don't necessarily mean anything unless they're related to a certain amount of traction or progress or some sort of change in the business that will make an impact. Because I think for any companies that are raising money from here on moving forward, they're still going to have to show that sustained trajectory. Obviously a lot of that will be discounted because of the current situation, but there still has to be something that you're working toward. And that's something we're talking about with all of our portfolio companies who are, extending rounds, raising bridges, whatever it might be. It's okay, we're putting in X additional money, but what's that going toward, and what is that going to achieve, right? What does that move the needle on? So I think the closer you can stay to where the market is in terms of what your next round investors are going to want, assuming that's the goal, right, to raise another round, the more important I think that'll be over the next few months.
Thank you. That's actually a great point. And the reason why we wanted to extend it is because we thought that 3 to 4 months of data, it's really nice to demonstrate product market fit, but maybe given the times, instead of coming to the investors, we are direct to consumers. So instead of coming to investors like, here it is, or first 1,500 users, and out of those 1,500 users, 20-30% they are actually engaging weekly or bi-weekly or monthly with the app, the product, retesting, so forth. And retesting, I mean, because we offer tests. What we decided is, like, let's make sure we extend the runway to, instead of coming with 1,500 users, to really come with a graph that shows a little bit more than like this 3 months, just because maybe we are assuming that investors might be raising the bar on like those, that data and like the length, and the curve shows a little bit like a growth, but like I want to see more of that organic. I want to see more of like that user behavior, like maybe they drop off after 3 months. So that's a good point. That's actually our goal here, to extend the runways, to make sure that at least that data looks more solid instead of just a quick 3 months graph.
Yeah, I think extending sort of the number of months of traction data, that seems directionally right to me.
Good to hear. Thank you.
Yeah.
The other thing I would think about is, I think there's a set of investors that will care about growth, of course, in any environment. But I think the scrutiny around unit economics and just the quality of your customer economics, how that is changing over time, has just increased in the last 6 months. It was happening pre-COVID-19. but it's certainly the case now. So a bunch of the companies I'm involved with are sort of, they started to flip at the end of last year to prioritizing LTV to CAC over growth, and that has just that sort of prioritization is accelerated as a result of what's happening now. And so that's just something to think about as well, is can you move the needle on your economics?
So I had a follow-up question on what was discussed and what Lola was mentioning about growth. And so when, if and when this becomes the new normal, what is the type of traction, or what type of bars would investors be setting? And what would they expect to see from companies? What type of work did they expect to see from companies during the COVID crisis? Do they expect the companies to, especially companies who are not in the health tech space, who are not expected to be affected negatively because of COVID, but positively? What type of traction would you expect from such companies post-COVID? And how would that change if there was no COVID?
Well, I think in general, a lot of companies are just going to get a pass for what happened in 2020 if they were able to survive. So I think whether you're in healthcare or not, my sense in 2021, 2022, 2023 is a lot of companies are going to have a flat declining line in 2020. It's just a tough time for many people. Of course, if you're in a category that is becoming more important, where you can have an up and to the right trajectory, then great. But I think you're going to be judged on your leadership during this time. The quality of your decision making. Perhaps you did become aggressive around a couple of key hires and managed to lay the foundations on the team side during this time to set you up for success. Perhaps you doubled down on the product and came up with something unique and different during this time. Like, I think those are the types of things that people will dig in on during this time to understand how you behaved as a leader. And that will be more important than the pure metrics story, because the pure metrics story is going to be weird for a lot of companies.
Yeah, I agree. I think it'll definitely be stagnant in terms of revenue and customer growth. But I think there will also be other leading indicators that will carry weight. So it varies from business to business. But for some companies, it might be the creation of, if it's a consumer product, some sort of engaged community, right? It could be a growth in top of funnel, right? If you're a B2B company that has sort of a top-down process. I think it'll look different for every company, but I still think there's going to be some measurement of, like, what did you do in 2020, right? Okay, maybe you didn't move the needle on top line revenue growth, but here's the foundations we set, to Nikhil's point about early hires or product development. Here's what we built. Here's what we shipped. Here's what we learned. Most importantly, right? What are the insights that you've gained? And I think even on the B2B side, even though there might be a slowdown in decision making, many companies and their employees have a reasonable amount of free time right now because they can't travel and they can't go anywhere. So I think it's a great time to really build out some of the proof points around your thesis and your vision for the company you're building. And I think all of that, assuming that there's some light at the end of this tunnel, I think all of that momentum heading into the recovery period should tell a story of what the next year or two will look like.
Got it. Thanks. Yeah, that's what we are trying to do. We are actually, just a quick response to that, we are planning to start doing clinical validation of our product because we have very good relationships with few psychiatry hospitals in the city, and they happen to have time for us right now. So we're going to do that in the meantime.
Yeah, I think it's a great time for a lot of that relationship building, whether it's with investors or with customers or with, future hires, or if you have your eye on a CTO, who you want to hire a year from now. It's a great time to kind of start laying that groundwork.
Yes, I mean, I've been following this website called layoffs.fyi. I don't know if you guys are familiar with that, but I've been following people who have been laid off, and it's an opt-in only website, and just building relationships there.
I think that for us, hiring was also such an interesting topic because we were definitely chasing a key marketing hire, but it's this time that we are in a time that we definitely see a lot of talent, being available or just being laid off from their company, so forth. But it's so tough at the same time for us because it's like, well, yes, there is a great opportunity here to go and anticipate recruiting a little bit more, but given the uncertainty of times, something that we've decided is actually, it's really tempting to go and engage these people. Maybe we can have some conversations with them, but it is not the time to make hires in the case that basically we run out of like money, or fundraising towards Q3 and Q4 doesn't look appropriate at all, and we want to go into next year. So I wonder how many people have found themselves in the same situation, or like how many companies of your portfolio have you seen that actually they found themselves being torn on, like, yeah, this talent pool is so great, and they became available, but it sounds really risky to hire people right now as a startup, specifically as a pre-Series A startup.
Yeah, in our portfolio, I would say most of our companies have a hiring freeze right now, at least for the next couple of weeks. We have 2 or 3 that have open roles, mostly on the product and engineering side. So they're typically the ones that are saying, here's what our product roadmap is, here's how we're gearing up for sort of a big wave of activity a couple months from now. So there's a few, but they're not hiring 20 people. They're hiring a couple to supplement the existing team. And there are a couple that are maybe opportunistically looking for, their chief revenue officer, right? If they find the perfect candidate, they'll think about bringing them on. But for the most part, I think from what I'm hearing, people are in the same boat as you and that they're waiting. One other thing we've seen some of our portfolio companies do really well is they've engaged people as advisors before they're able to bring them on full time. So maybe there's sort of a couple hours a week for some equity, maybe some sort of hourly rate that enables them to test the relationship, build some history there in terms of partnership, with the idea of potentially bringing them on full time at a more opportune time.
That's a great suggestion. Thank you. I got a pop-up that the breakout session is going to finish
in 30 seconds. Yeah, I see that too. It's a very urgent countdown. It's good to meet you all.
Yeah, likewise.
Good to meet all of you.